Our market monitor likes stocks he says are dominant in their sectors and will do well in any economic environment. Call them all-weather companies. This is his first time on the program. He's Jimmy Lee, managing partner at the Wealth Consulting Group. Jimmy, welcome. Good to have you with us. What makes an all-weather stock in your view?
Well, we're talking about companies that dominate their space, that create a moat so that in a economy that's weakening, they can still maintain a dominant position and do well, So I think that's important as we enter the later stages of the business cycle, Tyler. And if we do end up, getting a little bit of a pullback in the markets, I think these dominant names will be names that will hold up much better.
All right, let's move to your first pick, which is J.P. Morgan Alerian MLP, which is basically a play on the energy sector. What do you see happening there, and why do you like this one?
Okay, well, here it is. It's kind of contrarian, Tyler, in the fact that the biggest hit to Q3 earnings has come from the energy sector in terms of, projections going down as far as estimates. But I think that for a longer-term investor, somebody that's looking for 3 years on out, I think be able to buy as oil is coming down closer to 40. If it gets below 40, I think those are great entry points into the energy sector. This ETN provides a nice dividend yield. So even if we have a sideways market, the dividend's a nice thing to be able to put in your bank account.
All right. And speaking of a dividend, Coca-Cola is on the list as well with a dividend of better than 3%.
Yeah, so that's kind of a theme, Sue, that you're going to hear from me is that, again, we think that even though we have a little bit of a higher target on the S&P for right now, I think that if earnings don't follow through in Q3 and 4, that a negative shock from somewhere could really hurt the market. So companies like Coca-Cola with a dividend dominate the space. Coca-Cola does really well in terms of packaging and marketing their products worldwide. And as the trend goes to more healthier products, they're going to be on the front end of that. So we like Coca-Cola as well.
And speaking of dominating the space, your next pick is Alphabet, the parent of Google.
Yes. So Google, have you seen recently, has gotten out of some of their non-core businesses. The core business of search in China, they got out of that. They got out of an auto insurance comparing company earlier this year. They're focusing on cutting expenses and driving more efficiency to the bottom line. We think there's potential margin expansion and higher stock prices for Google.
And what about the market overall, Jimmy? I mean, there are those out there who say that the volatility we've seen portends a pullback in the market. Do you agree with that or not?
I do. I think you can expect more volatility going forward. And obviously with the interest rate decision coming up next week, I agree with your previous guest that we're not going to have a rate increase here in September. So if we do get one, it will probably be after the election, maybe in December. So I think a lot of this uncertainty has created a lot of, volatility that we haven't had for a long time as the VIX has been low all year. Mm-hmm. But I think going forward, you can expect a lot more volatility. Again, we think there's a little bit more of an upside, and we think that taking these dips as we get sell-offs as buying opportunities, if you have cash, I think is a good idea.
Jimmy, thanks. Jimmy Lee, have a great weekend with the Wealth Consulting Group.